Hi, welcome back to my channel, and this evening I want to go over a few things, but first I want to say that I am not a financial advisor, so this video is being made for entertainment purposes only. This is not personal financial advice for anyone. Alright, so as I get into this video, I'm looking at the SPY ETF that tracks the S&P 500. It was down a little bit today, down about 0.5%, and it's trading at $438.51 a share. Let's go over to QQQ. QQQ is down a little bit today, down a little more than 0.5%. It's trading at 364.57. Adjust this light a little bit. And then of course we can get into some of the stocks. I'm going to start out with Tesla. Tesla today was up almost $10 today, trading at $687.20. I've said in other videos I do not see this stock breaking above 700. I doubt it will. I believe that 700 is a resistance line now that I don't believe it's going to break above it, and that it's going to trade like this for a little while until the big crash. And we'll talk about that in a second, about the big crash that I believe is on its way. You look at Tesla, PE ratio 359, so it's trading for 359 times earnings, which people are still, you know, this is a very highly speculative play with Tesla, as they still haven't really made, you know, much money compared to their stock price. You know, yeah, their earnings were up a little bit, you know, but still you have the regulatory credits that boosted that. The market cap at $680 billion, that's a joke. There's no way in hell this company's worth $680 billion. You know, that's only because you people are paying the ridiculous price for their stock shares, which that's going to come back and haunt you here real soon. Okay, so let's take a look at Amazon. Amazon, here we go. Down today, 7.56%. It was at the open this morning, it opened up at 3,347 a share. And at close today, it closed at 3,327. The after hours on this, well, let's see, the after hours really didn't play much, but the open today was, like I said, 3,347, and it closed at 3,327. Yesterday, it closed at $3,599. So all in all, it's down $272. The last 5 days, it hit a high of I think 37.73 this week, and you know, it just fell off a cliff after the earnings reports came out on Thursday. It dropped from 3,600 to 3,343, all in just, I mean, it just dumped in no time. The next morning it was gone by Friday morning. This thing just, the bottom fell out. But you know, that's Amazon. You know, it's, you know, Amazon really was one of those ones that took advantage of the, you know, when COVID came out and the pandemic and people were staying home, and they were doing a lot of buying on Amazon and staying at home, and Amazon just, there's, you know, their earnings were good, but they're down now because people are back to work, people are out shopping again. But I mean, Amazon is still a good long-term hold, depending on where you got in at. If you paid any more than $2,500 for this stock, you could be in trouble for the next 15 to 20 years. And we'll talk about that in a second too. But here it is, it's trading at $3,327. You got Microsoft trading at $284, down 1.38% in the last 5 days, down a little over 0.5% today, but it's trading now at $284.91. It hit an all-time high of $290 a share. Microsoft is one of those companies that I don't, like I said before in my other videos, I don't see this one being disrupted at all by any other companies. Okay, Apple today was up, okay, $145.86. PE ratio 28.57. Let's go back to Amazon's PE ratio. See, Amazon, even with them trading at 3,327, their PE ratio is 57.99, so you might as well just say 58. 58 times earnings, okay? I'll tell you, people, that's, you know, it just tells you, man, these are crazy times. You know, your people are buying these stocks. You know, and even Apple, you think you're getting a great deal, but you know it's trading at 28.5 PE ratio. Facebook, price to earnings 26.4. Alphabet, PE ratio 27. Now, Alphabet, that's a money-making machine. Okay. Google, YouTube, these are money-making machines. They're getting tons of money from advertisers. But see, here's the thing: if we run into a recession, this stock will come down too, just like the rest of them. You know, it's in the next market crash. So it's trading. It's got a 27 PE ratio, trading at 27 times earnings. So you're looking at all this, and this stock market right now is just kind of bouncing back and forth, up one day, down the next, up one day, which tells me this is one, there's no way in hell I'm buying a stock right now. I'm not buying any stocks. You know, if you're a young person, yeah, but right now you want to stay away from putting lump sums of money in the stock market. I'd stay the hell away from that. Because we're getting to a time now when the prices we're looking at right now could be this same way or even less 15 years from now. All right, I know a lot of you probably think I'm crazy by saying that, but I'm telling you, I'm warning you, this is, somewhere down the line, they're gonna raise the interest rates. And when they raise those rates, that money's, the big money's coming out. You know, they're gonna sell their stocks off like crazy. These institutional investors that hold 75 or 80% of the stocks in the market, they'll sell off and move the money, and then who's there going to be there to pick up they're buying back. I mean, the retail people, you know, when times get hard, and this happens always at a time when you don't want it to. It'll be at a time when you don't have money, when you kept buying the dip, and the economy is not as good as what they're saying it is. Yes, they printed a bunch of money, but that money has just made inflation go up. So all our products have went up around us. So we're in a jam right now. And right now, you know, I've been looking at I still have 55 shares of QQQ that I'm thinking of unloading, but you know, I got in at such a cheap cost basis. I got in at about an average of $28 a share on my QQQ. So I'm probably just going to hold and be a bag holder on all this. But I know that I got some cash that I'll buy once this market gets down at least 50% from where it's at now. Yes, I believe it's going to get 50% lower than what we're looking at right now, or maybe even less. Okay, I know some of y'all may find that hard to believe that, you know, it could ever get 50% lower than what it is. Hell, this thing could get 60 or 70% lower than what it is in the next 3 or 4 years. You don't know. Nobody knows what this market's going to do. But I'm telling you right now, as high as expensive as everything is, none of this stuff's worth it. It'd be like going out right now and buying a brand new pickup truck that you know is only a $50,000 truck and paying $100,000 for it, or a house that's worth, you know, $200,000 and you're paying $500,000 for it. It's just a matter of time before this thing crashes. So keep that in mind. I'm going to end the video on that. Just going over looking at these stocks today, and I think the market's in trouble. I think it's hit its high right now. I think it's at its high, and it's not going to bounce much higher than this, and from here it comes down. Probably within the next couple years until we find a bottom. All right, well, hope you enjoyed the video, and I will catch you on my next one. Y'all have a great evening.